Imagine, you wake up, you check the charts. Nothing is happening. But instead of closing your laptop, you force a trade. An hour later, you're down 2%. So you try to recover. Another trade. Another loss. Now you're angry. Now you're emotional. Now you're no longer trading. You're gambling. By the end of the day, you've taken 15 trades. Your account is bleeding. Your confidence is destroyed. And the cruelest part? The market never asked you to trade. You volunteered. Here's the truth that almost nobody tells beginners. The market doesn't pay you for working harder. It pays you for waiting longer. And that's exactly why some traders make six figures taking only a handful of trades every month, while others spend 12 hours staring at charts and lose everything. Today, we're exposing the biggest lie in trading, because sometimes doing less is exactly how professionals make more. Trading isn't difficult because charts are complicated. Trading is difficult because humans are addicted to action. Think about it. When you're bored, your brain wants stimulation. When you're scared, your brain wants certainty. When you lose, your brain wants revenge. When you win, your brain wants another hit. Notice something? Every emotion tells you, trade. Trade again. One more setup. One more candle. One more opportunity. The market becomes a casino, not because it is won, but because your brain treats it like one. Every click releases anticipation. Every position creates excitement. Every profit feels like dopamine. Every loss creates emotional pain. Suddenly, you're no longer following a strategy. You're chasing feelings. And feelings are expensive. Let's imagine two traders. Trader A trades 25 times every day, never leaves the screen, always searching, always analyzing, always exhausted. Trader B waits, sometimes doesn't trade at all, some days literally closes the laptop after 10 minutes. Which one do you think most beginners admire? Trader A, because activity looks like productivity. But markets don't reward activity. They reward accuracy. Professional traders understand something beginners ignore. Every trade costs money. Spread, commission, slippage, mental energy, focus, confidence, decision-making capacity. Every unnecessary trade slowly drains all of them. Professionals don't ask, "How many trades can I take today?" They ask, "How many trades can I avoid?" That single question changes everything. There's a strange paradox in trading. The more desperately you want money, the less money you usually make. Why? Because desperation destroys patience. Patience creates selectivity. Selectivity creates quality. Quality creates consistency. Consistency creates wealth. Notice, profit is at the very end, not the beginning. Most traders reverse the order. They chase profits first, which destroys everything else. Imagine you're a sniper. Would you fire at every movement? Of course not. You wait. You observe. You breathe. Then, one perfect shot. The average trader behaves like a machine gun. Thousands of bullets. No target. Professionals are snipers. Beginners are spray and pray soldiers. That's the difference. Here's something nobody expects. Watching charts for 8 hours doesn't improve your trading. Sometimes, it destroys it. Because the longer you stare, the more patterns your brain invents. Psychologists call this pattern recognition bias. Your brain hates randomness, so it creates opportunities, even when none exist. Suddenly, every candle looks bullish. Every pullback looks tradable. Every breakout feels real. But the market hasn't changed. Only your perception has. You didn't find more setups. You lowered your standards. That's why many profitable traders spend surprisingly little time watching charts. They already know what they're waiting for. Everything else is noise. The most expensive word in trading is maybe. Maybe it'll reverse. Maybe it'll continue. Maybe this breakout is different. Maybe I should enter early. Maybe I don't want to miss it. Every blown account has been built, one maybe at a time. Professionals don't trade maybes. They trade confirmations. The difference sounds small. Financially, it's life-changing. FOMO is fascinating because it convinces intelligent people to become irrational. You see price moving. You weren't prepared. You missed the entry. Your plan says, wait. Your emotions say, buy now. So you enter late. Exactly when professionals begin taking profits. The market pulls back. You panic. You exit. Price continues without you. Now you're frustrated. You chase again. And the cycle repeats. But here's something powerful. Opportunities are infinite. Capital isn't. Missing one trade changes nothing. Losing discipline changes everything. Imagine this. Month 1. You take 80 trades. 40 winners. 40 losers. Constant stress. Sleepless nights. Emotional roller coaster. End result. 2% profit. Now, month 2. You wait. You become extremely selective. Only 15 trades. 12 winners. 3 losers. Lower stress. Higher confidence. Better execution. End result. 8% profit. Less effort. More money. Why? Because trading isn't paid hourly. Nobody rewards your screen time. Nobody gives bonuses for clicking faster. The only scoreboard is your account balance. Most people think they're traders. They're wrong. Your real job is risk manager. Every day, your first responsibility isn't making money. It's protecting money. Because capital is opportunity. Without capital, there are no future trades. Every reckless position steals tomorrow's possibilities. Professionals survive, then thrive. Beginners chase, then disappear. One of the hardest skills in trading is doing absolutely nothing. Imagine sitting in front of your charts, seeing movement, doing nothing, watching candles explode, doing nothing, seeing people online celebrating profits, doing nothing. That silence feels painful because inactivity feels like failure. But in trading, inaction is often mastery. The ability to wait is one of the rarest competitive advantages because almost nobody can do it. The market doesn't care. Not about your intelligence. Not about yesterday's profits. Not about your predictions. Yet ego convinces traders. They're smarter than probability. I know it'll reverse. I can't be wrong. I'll average down. I'll recover tomorrow. The market punishes certainty, rewards humility. Professionals accept uncertainty. Beginners argue with reality. Reality always wins. The funny thing about consistently profitable traders is they're boring. No dramatic predictions. No emotional live streams. No revenge trades. No excitement. Just routine. 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 Wake up. Analyze. Wait. Execute. Journal. Leave. That's it. Success in trading isn't exciting. Failure is. Which is exactly why social media glorifies the wrong traders. The loudest traders are rarely the richest. Imagine if every trade cost $1,000. Would you still enter randomly? Probably not. Now imagine every click came with physical pain. Would you still overtrade? Of course not. The problem isn't opportunity. It's friction. Modern platforms make trading too easy. One click. Done. Your finger moves faster than your brain. Professionals create artificial friction. Checklists. Rules. Waiting periods. Confirmation. Because slowing down improves thinking. Here's the uncomfortable truth. Many traders don't actually want consistency. They want excitement. Consistency feels boring. Big wins feel addictive. So they unconsciously sabotage discipline to experience emotional highs again. That's gambling psychology. Not investing. Not trading. Gambling. Until you separate excitement from profitability, you'll keep repeating the same mistakes. Almost every profitable trader has a similar story. Not the same strategy. Not the same indicators. Not the same market. The same realization. I stopped forcing trades. That's it. No secret indicator. No magical algorithm. No hidden institution strategy. Just fewer decisions, higher quality, greater patience. The edge was never hidden inside the market. It was hidden inside self-control. Imagine looking back 5 years from now. You have two versions of yourself. The first version still chases every candle, still believes more effort equals more profit, still overtrades, still blames the market, still resets another funded account. The second version waits, protects capital, accepts boredom, respects probability, trades only when everything aligns. One trader feels productive, the other becomes profitable. The difference? Not intelligence, not talent, not luck, discipline. Every professional trader eventually discovers a painful truth. You don't become wealthy by trading more. You become wealthy by making fewer, better decisions. The market isn't testing your strategy. It's testing your patience. And patience is expensive in the short term, but priceless over a lifetime. So the next time you feel the urge to take just one more trade, pause. Ask yourself one question. Am I trading because my strategy says so, or because my emotions need something to do? That single question could save your account. It could save months of frustration, and it might completely change your trading journey. If this video changed the way you think about trading, don't keep it to yourself. Hit the like button so more traders can escape the overtrading trap. Subscribe for more cinematic trading psychology videos that expose the mental battles most traders never talk about. And before you go, leave a comment below. What's the biggest lesson the market has ever taught you? Because sometimes, the most expensive lessons become the most valuable ones. Trade less. Think more. Protect your capital. Because in the end, the traders who survive are the traders who learn that the best trade is often the one they never took.